Joining in today, we have Sharmila Joshi, who joins in to answer all your stock queries, and Nikhil Kothari as well will be answering all the personal finance questions. Hi, good afternoon to both of you, and thanks very much for joining in just as the holiday season is about to begin. Our first caller is on the line with us already. Asha Patil calls in from Mumbai. Hi, Asha. Asha, can you hear me?
हेलो.
Hi, Asha. What's your question?
हाँ, मेरे पास टाटा के 100 शेयर्स है एट द रेट ऑफ 458. उसमें होल्ड करे या एग्जिट हो जाए?
आप लॉन्ग टर्म इन्वेस्टर हैं?
हाँ, लॉन्ग टर्म.
ओके, और फिलहाल आपको फंड्स की कोई जरूरत नहीं है?
नहीं.
Okay, Sharmila, she's making a bit of a loss actually on Tata Steel. So the stock has lost about, I think, 60-70 rupees from where she first bought it at. What's your advice for her? Should she remain invested?
I think so, because, I think we've seen really the entire metal space pretty much not participating in the rally at all in these last 5-6 months, largely to do with the negative news flow on coal auction, mining, etc. And I think it will be at least 5 to 6 months till we see clarity on these issues. Tata Steel also, of course, has the Europe exposure, which also may not be doing too well for it at the moment, largely because I think globally there is a slowdown in commodities. So I think if you keep both those things in mind, I think it's a time really, I mean, this is not the right price to exit the stock, but at the same time, I don't really see metals as a space running up in a big hurry. So I think you'll have to give it at least a quarter. So my recommendation really would be to see what kind of clarity emerges, post these auctions, wait for the quarter results, and then really revisit the stock.
All right, then valid point coming in from Sharmila. In fact, I was just reading a report from Deutsche Bank, and they were saying that expect a weak quarter, but going ahead, we can expect stability to come back to that particular counter as well. But that's about Tata Steel. Let's go to our next caller who's standing by. Meera Shekhar calls us from Bangalore, and she has investments in Sun Pharma. Hi, Meera.
Hi.
Good afternoon. How can we help you?
I've got 15 shares in Sun Pharma, bought about 6 months back at the rate of 600 per share.
Wow. All right.
Now I have a decent profit, but is it a time to exit or should I hold on to them?
All right, Meera, so you're making a profit, so I'd like to ask you this. Are you a trader, someone who'll just book out its profits and get out, or are you an investor? Are you prepared to hold the stock?
I'm an investor. I would like to hold on to value stock.
Good news, Meera. So let's get you some advice then. Sharmila, what do you think? One of the best stocks, got it at $600, making good profit. Still hold on?
I think so, because I think that this is not a market where you should really exit defensives like Sun Pharma. And I think the caveat here would be, because of late we've seen US FDA really get active, and, they do keep really examining facilities, and they have some comments, etc., and which can negatively affect stocks for they can shake things up for a bit, as we've seen in a lot of cases. So you should keep a track of that kind of news flow. But overall, I think the way the pharma industry is poised, and the fact that Sun Pharma will now be Sun Pharma, post Ranbaxy will be a much larger entity domestically, would mean that, the future for Sun Pharma would certainly, I think, you should see it at least go back to that 900 plus kind of price that it was at before it started correcting, from where it started correcting. So I think, that would at least be a near-term target that you can look for. But as such, I think this is a stock that you should keep for your portfolio and stay investment. As a disclaimer, I too have this stock.
All right, and finally, we have also another query which has been sent to us by Mitali Kulshrestha, who writes to us from Bangalore. She wants to know the benefits of open-ended mutual funds, and also wants to know how much she should be investing and which open-ended funds she should be investing in currently. Nikhil?
Yeah. See, open-ended fund is a type of mutual fund where you have a benefit that you can invest at any point of time, and whenever you need money, you can redeem at any point of time. Say, for example, today you have got extra 10,000 rupees and you want to invest in an open-ended fund. You can invest at any point of time, and you have already created portfolios of say 10 lakh rupees, and suddenly you need 50,000 rupees. You can withdraw from open-ended fund. So it gives you flexibility to invest at any point of time and also withdraw at any point of time. In terms of your overall savings, as a thumb rule, you should at least save 20% of your overall earnings in terms of savings and investing. So that should be a broad thumb rule. In terms of investing, I'm assuming that you are investing for a long term. So if you're investing for long term, you should invest in asset class which should be able to beat inflation. So you should look at diversified equity fund. And in diversified equity fund, now you can look at either ICICI Dynamic Fund, or you can look at Reliance Equity Opportunities Fund. These are multi-cap funds, so they invest in mix of large cap stocks and mid-cap stocks. So around 40 to 50% will be large cap, and rest will be in mid-cap stocks. And on an average, you can expect 12 to 15% return in a long period of time.
Shivang Bhattacharya writes to us from Mumbai. He says he's looking to invest in a retirement benefit scheme, which also has some tax benefits. He can invest up to 20,000 rupees a month and needs suggestions on which schemes he should be investing in. Okay, I don't think that's... we have the caller with us. Okay, Shivang, are you with us?
Yeah, I'm here.
Okay, go ahead. Tell us your question.
Yeah, technically I was looking at a scheme where I could invest up to 20,000, a good retirement scheme, heavyweight,
Okay.
With good tax benefits in the end.
Okay, and how old are you, Shivang?
45.
45. And so far, have you done any retirement planning, or is this the start of it?
No, just insurances, Edelweiss and...
Okay, so you have your insurance in place, right?
Yeah.
Okay. Nikhil, what's the advice for him?
Yeah. Hi, Shivang. Right now you are 45, so broadly you have 15 years for your retirement, and today retirement is one of the most important goals. And you are a corporate lawyer, so basically you don't have a EPF account. So what I'll say that instead of buying a retirement fund directly from the manufacturer, you can create your own retirement fund based on your risk appetite and your time horizon. What you can do is that for your debt component, you can start looking at investing in a PPF account. When you invest in PPF, you get tax benefit, and when you redeem this amount, all this money will be tax-free in your hands, and you can expect around 8.75% in current juncture. So out of 20,000, you can look at investing 5,000 on a monthly basis in PPF account. And since it's a long-term goal, you should look at equity as a core part of your portfolio, because equity in the long term will be able to beat inflation. So for equity, either you can invest in diversified fund. So basically you can look at one large cap fund and mid cap fund. You can look at 10,000 in Birla Sun Life Frontline Equity Fund and 5,000 in UTI Mid Cap Fund. And this money also, when you redeem after 1 year, all this money will be tax-free in your hands. However, one more thing, if you have not utilized your complete 1.5 lakh rupees under Section 80C, then instead of diversified equity fund, you can look at equity-linked savings schemes. Equity-linked savings scheme is similar to PPF. The only difference is that PPF invests in debt, ELS invest all the money in equity. And when you invest, you get tax benefit, and when you redeem after 3 years, all this money will be tax-free in your hands. So with the help of PPF and ELSs, you can create a good retirement portfolio, which will give you tax benefit when you invest, and when you redeem, all this money will be tax-free in your hands.
All right, then that's some valid advice coming in there from Nikhil. But let's get back to answering some stock queries. Karanveer Singh Thakur calls us from Chandigarh, and he has investments in JP Associates. Hi, Karanveer.
Hi, sir.
Hi, how can we help you?
Sir, I have bought a JP Associates, 1,850 shares at an average price of 54 rupees.
Okay.
So I want to know what is the future of JP Associates. Will it be able to cross 54.60, or right now it's trading at 23 or 24? So I've lost a huge money.
That's true.
So tell me about the future of JP Associates.
That's true, Karanveer. Sometimes these markets do harsh things to you, but let's try to help you out from these levels. You've lost close to around 50% of your portfolio on this particular counter, but they're trying to do various things with regard to lower their debt and selling various assets. But let's get in the expert. We have Sharmila with us in the studio. Sharmila, they've been selling their assets. Some people say that they've been selling some of their best assets. Do you believe that there is a turnaround possible? The stock is up 8%, but still our investor Karanveer is down close to around 50% odd. Can he remotely think about getting that price?
So this is really a very difficult question to answer, because as you said, this is a company that has a huge sort of leverage book, and they have been trying to get rid of some of their assets to bring down their debt levels, and we've heard them announce a sale of cement plants for UltraTech. So while I think this works out nicely for UltraTech and JP Associates in the sense that it does help them reduce debt, I think that's still far away from being out of the woods. Also, I think the overall economic environment goes against companies within the infrastructure space, the road building being one of their activities, other infrastructure, as well as power. So, this current economy is still not conducive to any of these sectors. So, I think the broad point here being that this may not be a good level to sell, but at the same time, it's very difficult to say whether it will go back to 54 in a hurry. So, one way of looking at it would be to give it another quarter and then see if the budget promises really anything, or if you really see a solution for power as a sector, whether they're able to really disinvest some of their other cement assets, and then going forward what the book looks like for JP Associates. But yes, I think you are going to see sort of troubled times for a little while more, so be ready for that. But if you're ready to face that, then maybe you could wait it out for another couple of quarters.
The line as well, Sanjeev Kumar calls us from Delhi. Hi, Sanjeev.
Hello, madam.
Hi, good afternoon. What's your question?
Good afternoon. Madam, my question is, I want to invest 50,000 rupees in ICICI Bank and SBI Bank.
Okay. And any particular reason you've narrowed down on these two banks?
Because these two stocks are थोड़ा स्प्लिट हुआ है मैडम, ये शॉर्ट में है.
अच्छा. और इसके अलावा आपके पास है स्टॉक पोर्टफोलियो?
जी हाँ, राइट नाउ आई एम हैविंग NBCC 50 shares and Suzlon Energy 1000 shares.
Okay. Sharmila, the rest of his portfolio consists of NBCC and Suzlon, but now he's looking at, marquee names like ICICI Bank as well as SBI. Would you give him the go-ahead to invest at current levels?
If that's the extent of his portfolio, my only observation would be that don't buy both. I mean, both stocks are good to buy, especially if you're looking at a year's kind of outlook, then both are good to buy at current levels. But I think my problem is the fact that it would be two banks and in a portfolio which has only two other stocks. So maybe you could look at some other sector. My bet would be buy a pharma or an IT. You can either buy a Sun Pharma, or you can buy within the IT space, you can buy a Tech Mahindra. And buy either an ICICI Bank or SBI. I prefer ICICI Bank to SBI, but I have both. So, as I said, both banks look good to buy, but I leave it up to you. My ideal choice would be one bank and one stock from another sector.
Okay, संजीव, आपके लिए फिलहाल यही राय है कि आप दोनों बैंकिंग स्टॉक्स नहीं, ICICI बैंक जो है उसमें आप अपना निवेश फिलहाल करें और एक और स्टॉक दूसरे सेक्टर से लें. On that note, Sharmila, Nikhil, thanks very much for joining in today. We wish you happy holidays.